Hello, everyone. Thank you so much for tuning in to the second episode of the Synergy Market Talk Show. My name is Ibrahim Abouath. I'm joined with
Terrence Marshall.
and
And we got Heaven Cayman.
amazing. So today we're going to go over the stats for January 2024. Once a month, we're going to go over all of the stats so that you stay informed, you know what's going on with the market, and you get an inside scoop from agents that are actively selling real estate in the Greater Toronto area. So let's get right into it. We're going to start talking about what the difference was between January 2024 and January 2025 and January 2024. So in 2025, sales were actually down by 7.9% compared to January of last year. So the total number of sales we had last month was 3,847. At the same time, the average price was actually up this year, a 2.6% increase. So in 2025, the average price for all home types was 1,147,000, whereas last year in January 2024, the average home price for all home types was 1,117,000. So a difference of about $30,000, which is very interesting considering the slow growth that we've had over the last 12 to 18 months. Now, at the same time, this last statistic is actually pretty shocking. In January of 2025, we had 12,392 new listings. That's up 48.6% compared to last year, almost a 50% increase. So to me, that's the most shocking of it all, along with the average selling price. Hearing these statistics, what are your immediate thoughts?
I think listings up 48%. That's something you want to pay attention to. Reason being is what we've noticed over the last couple of years, in my opinion, is that spring market that typically happens with people coming onto the market in March is moving more and more up. So we're seeing the spring market become the winter market. People are listing earlier in the year, which it looks like some people took our advice from the last video, which is great. But as listings go up, in the winter, that's weird typically because most people don't want to move in the winter. So that means there's got to be some other motivations there. And I think there's a couple of things directing towards that is we've got people who probably have a mortgage renewal coming up later in the year and want to sell now. So they have more flexibility going into the year with what they might want to do. And obviously you're going to have people who are always moving, might be thinking that it's an opportunistic time still to buy. So maybe they want to get a head start on selling. I think there's a couple of comments there to be made, but what are your thoughts, Evan?
Yeah, I think with the internet too, I feel like the information is getting spread out a lot more as well. So people know that during the winter time you can get better deals. So obviously they got to liquidate their current property in order to get into the next property because there's a lot of really good deals happening right now, right? So I think that's another reason why there's a lot more inventory and a lot more sales happening.
Well, the sales are actually down.
Yeah.
There are new listings, right? So the data suggests that we're actually having more inventory, but the sales are not there to support the additional inventory. I think one of the reasons why that's the case is there's a lot of economic uncertainty right now in terms of, domestically within the country as well as internationally when we look at the threat of tariffs and everything. I think with Trump coming into power, that's definitely had an effect on buyer confidence, at least in the month of January, and probably that's going to continue moving forward until we have a little bit more certainty on what's going to happen with the tariff situation, with our economic situation. I think I read that our GDP this year is actually projected to decrease by 1.5% in 2025, which is pretty shocking.
Is that with contemplating tariffs or without any tariffs?
I can't recall. I think it was on the last Bank of Canada announcement. So I think that was with the tariff situation, we would lose 500,000 jobs and our GDP would decrease by about 1.5%, which is going to be disastrous for the market.
Yes.
We'll get into the tariff situation in just a moment, but what do you guys think in terms of buyer confidence? What are you seeing out there right now? Why do you think sales are down in January?
I think back in the fall, people were thinking that we were going to have a better winter market with the new CMHC program coming into effect and financing becoming a lot more flexible for people who wanted to buy more expensive single family homes. The fact of the matter is that there was probably more certainty and less economic news back in the fall and positive financing news. Now what we have is a lot of political uncertainty with the prime minister resigning. We don't know which party and when the election. We know which party's coming in, but we just don't know when. That's uncertainty politically, economically, like you mentioned, the tariffs and Donald Trump and all the policies, which as of today's video, those are put on pause for 30 days. We'll get into it more. But when you have so many things going on and buyers being clouded with a lot of information, they feel more nervous to put in an offer because maybe something drastic could change within the next 30 days with the tariffs. And then their closing could be impacted, their appraisal could be impacted. Like there's so many variables here at play. And so I think I think what you really want to do is get with a competent agent and make sure you're pricing all of that uncertainty in with your offers. There's no need to rush. I mean, sales are down right now. Although prices have ticked up a bit, I don't consider that anything material per se because people are using last month's comps to make offers on properties today. So that might not be priced in exactly in terms of especially
So
when
why
we
don't
have,
you elaborate on that a little bit?
yeah, let's talk about it. I mean, when we're talking about average price, a lot of stuff gets lumped into that number. We're talking every single type, semi-detached, detached, being priced into that number. We're talking about sales all across the board in the Toronto Real Estate Board, which spans all the way from Mississauga, Toronto, right, Durham. So I mean, that number has a lot involved. So for $30,000 for it to go up and down, I don't read too much into that. But the number of sales, however, is a direct correlation with buyer confidence and the amount of offers being put in. And with the increase in supply coming on now, and maybe buyer confidence going down, it's going to be interesting to see how February and March play out.
Okay, so what's interesting is let's take a look at the average price for GTA and the city of Toronto. So the city of
Perfect.
Toronto
Let's
and rest of GTA.
specify it a bit more.
So in the city of Toronto in 2024, the average price for all home types was 957,385. And we had in 2024 3,465 listings. This year, last month in January, that average price increased from 957 to 985, and the number of new listings increased from 3465 to 4737. So we saw average prices go up. At the same time, new listings came up as well. In the rest of the GTA, the 905 region, we saw the average price also increased from 1,061,000 in 2024 to 1,072,000, so a smaller increase in percentage wise, but the number of new listings was drastically more, from 4,800 to almost 8,000 new listings in the 905 region. So the trend is there for the whole GTA. It's not just restricted to city of Toronto or Mississauga or York region. All across the entire GTA, we've seen prices go up. However, there
Right,
have
but
been
not by much.
not by much, not
Yeah.
by much. But at the same time, we've seen a lot more sellers be prepared to enter into the market. I think personally the reason why we're seeing that is because we have a ton of mortgage renewals coming up this year, and people
course.
that purchased in 2020, 2021, the statistic is, I believe, 80 to 90% of all people that purchased in 2020 to 2021 have their renewals coming up this year or early next year. So we're going to continue to see a lot more inventory coming up on the market over the next few months. How do you think, Kevin, that's going to affect, the real estate market with all this additional inventory?
I think it could actually affect the prices, especially with the economy being the way it is right now. I think the prices can continue to come down. And already I'm finding buyers, they're taking their time purchasing their home. There's in terms of bidding wars, the bidding wars, we're seeing if it's a nice, properly renovated, properly priced home, I'm seeing about 5 to 6 offers on average for each. If there is an offer date to begin with, but I think once the buyers see a lot more inventory, they're gonna they're gonna take their time with their purchase, and they're not gonna be as desperate and throw money at specific homes because they have that option, right?
And that's really been the case for the last maybe 6 to 12 months,
Yeah.
where buyers are more cautious, buyers are more strategic, and buyers are more patient when it comes to buying their homes. There's a lot of inventory out there, so buyers are taking their time finding the right home, and even when they find the right home, they're not overbidding. So while bidding wars are present, they're nothing crazy like we've seen in 2020 in peak COVID time, right?
Yeah, and while I think that the prices are up, again, like to reinforce my point, why I don't read into that too much is because people are those listings just came onto the market. So it's going to take some time for that to trickle in. And nobody was listing the first week of January right after the new year, right? But I know people were buying more so during the first week of the new year, which means that those listings are going to lag more so into February because most of them are not going to sell. That's just the fact, especially if they're not renovated and there is more competition on the market and buyer activity is down. On top of that, remember a lot of those buyers that are buying in January, there was probably less listings from December. I'm assuming were listings quite up in December. I can't recall from.
I can't remember off the, let's see, December of 2024, there were 5,429 new listings. I don't have the stats for December of 2023, so
Three.
I
Okay.
can't compare.
Right.
But in any case, I think one important caveat to consider is what was going on in January 2024. What was the economic situation and the monetary policy situation at that time? At that time, interest rates were at an all-time high. The Bank of Canada didn't start their interest rate decrease cycle. That actually came about in the summer of last year. So while prices are higher this year by about $30,000, I don't think it really means much because sales are down as well compared to last year. And a lot of buyers in January of 2024 were simply just waiting it out to see what was going to happen with the interest rates before they stepped forward and made a move in the market, right?
Yeah, which is exactly why buyers were more confident, I would say, up to the fall of last year before all this economic certainty. While interest rates are probably one of the greater variables to real estate and how people act with real estate, there's still just so many macroeconomic factors at play right now.
Yeah, I think at least for the time being, interest rates being the biggest determining factor of whether the market will go up and down it's no longer the case. We've seen, I think, 6 or 7 or 8 straight interest rate decreases, and the market hasn't moved much. We've seen more activity, but the prices have remained stable. I think what's more important to look at is greater economic indicators. How is the country doing in terms of the unemployment rate? What's our GDP going to look like per capita? What is the international and domestic trade policy going to look like over the next few months, right? I think people are focusing more on the economy now rather than just the interest rates alone. To give you guys some perspective, the interest rates right now, the best 5-year fix you can get for an insured mortgage is under 4%. We've historically been in the threes for much of our time as a Canadian real estate market in terms of interest rates.
I think the other thing too is that while interest rates are coming down, so for example, let's say we look at the January meeting, rates came down by 0.25. Lenders are also decreasing their discounts by that amount to also protect themselves and hedge their risk on those loans. So while there was a 0.25 decrease, I've even found most people say, okay, that doesn't affect the fixed rates, which it doesn't. But even on the variable side, variable sides are derived with the lender's prime rate and a discount. And what I'm seeing and what I've heard from another mortgage broker is that those discounts are being decreased to counteract the policy rate decrease. So then that way lenders are also hedging their risk on these loans because they also don't know what's going to happen over the next couple of years.
Like the discount used to be prime -1, sometimes minus 0.75%. Now it's as little as sometimes prime minus 15 basis points, which is 0.15%, maybe 0.25%. So the discounts are definitely getting lower, but still, we're still seeing variable rates right now in the mid to high 4s, which is not that far off from what the fixed rates are. So I think that's actually a good talking point. Right now, I'm just going to throw this in. If you are considering purchasing a home or if your renewal is coming up, it actually might make sense to consider a variable rate mortgage right now. What do you think about that?
I personally think a variable rate mortgage versus a fixed, right? Like there's so many other variables there, especially with like if you think you're going to break it and all that other stuff because penalties are involved. But I think based on the trajectory,
let's
assume everything else is constant.
Let's assume your goal is to save the most amount of money.
I
Right now,
personally think a variable rate mortgage probably makes the most sense, so long as things continue. And here's the other thing, right? We'll get to tariffs in a second, but if the tariffs come into play, rates are going to go down even further. So that will play out in your favor. But right now, the bank is on a rate cut cycle. So I mean, if you're going to be in that home for the next 5 years, you're likely going to save
well,
more money with the variable.
let's talk about the tariffs for a second, right? If the tariffs do come through, what's going to happen? We're going to lose a lot of jobs and our economy is going to suffer. The US economy will suffer as well, but the Canadian economy will suffer more. And BMO just released a new report where if the tariffs do go through, they are projecting the Bank of Canada to drop interest rates 6 straight times by 1/4% each time, changing the target policy rate to 1.25%.
I think it was 1.5, right?
It was 1.25 according to the BMO report that I
Okay.
saw. The previous target policy rate that BMO projected was around 2.25 to 2.5%. So they're
So you think they'll
expecting
go down by another
by,
quarter?
by another
Well,
quarter.
one and a quarter.
Yes, exactly. So if you are on a variable rate mortgage, you're gonna save a lot of money over the next 6 to 12 months if that does happen. But that's the key question: is that going to happen? There's a lot of uncertainty here. So let's talk about the tariffs now. We can switch over and segue a bit. What do you guys think will happen to the market if the tariffs do go through? Because that's the elephant in the room right now. Let's talk about it.
I think if the tariffs go through, there's going to be a lot more people on the sidelines to see how that all plays out. Because remember, tariff policy comes in, things are not going to shift immediately, and data isn't going to be tracked immediately. It's going to be tracked immediately, but the reports might come out a month later to see what the actual impact of all that is. So there's going to be job losses. There's going to be increase in pricing, right? I've already seen people change their consumer behavior. Like I was standing in a Costco the other day, and I could hear somebody taking a sample and asking, "Are these Krispy Kreme donuts made in Canada?" Like somebody was asking that, and they were looking at the packaging. Somebody else was looking at the packaging and asking if this was made in Canada. So I think Canadians are really patriotic at this point, where they're going to buy made in Canada goods, but that doesn't change the overall fact that people are not going to like the uncertainty. They're going to wait on the sidelines to see how it all plays out. Unemployment's going to rise. Prices are going to rise, most likely.
Consumer prices, not real estate
Consumer prices on everyday goods, right? And I think real estate prices are bound to come down, because what's going to happen is the people that are hoping to buy, some of those people are going to lose their jobs and they're not going to be able to buy. But the ones that do continue to retain their job and take action could possibly see some really good deals. That's my
Absolutely.
opinion.
So that's the other thing. We're gonna get to you in just a second, but you talked about like consumer pricing behavior has changed. An interesting thing I saw was that federal GST,
The holiday?
the holiday, actually did not result in any economic boost for the country. People actually spent less over the last 2 3 months, even with no GST or HST on a lot of products. So that was pretty interesting, and I think that behavior, like you mentioned, is just going to continue further if the tariffs come through. But what do you think, Heaven, if the tariffs are going to go through? What do you think buyers are going to do? What do you think sellers are going to do? How do you think it's going to play out?
I think the overall price is just like how Terrence said. I think the prices are going to continue to come down. Um, Obviously, the buyers are going to get more deals, but it's also the sellers, right? So if the sellers lose their job as well, right, they're going to be in a position where they have to sell, and if they don't get the right price, they're going to have to sell it for whatever price that they end up getting in terms of the offer date, right? And I think that overall is going to trickle down into lower home prices. But I think just like how Terrence said, I think it's going to take a couple of months for us to see the overall impact of everything too. And I think this is a whole tariff, because initially the tariffs was supposed to being placed on February 1st.
January 20th, then
Sorry,
February
yes, yes,
1st.
yes, and then they kept pushing it back, right? They kept pushing it back. So there was a lot of there's a lot of uncertainty in the market, and usually whenever there's major uncertainty like that, buyers and sellers like to take their time with their decision on a major purchase
Absolutely.
like a home as well,
The other
right?
thing to consider is, even if the tariffs come through, how long are they going to last? Because that's going to be a key indicator of whether or not real estate prices will fall, and how much the economy will suffer. So if we go back to 2016 to Trump's first term, he put a tariff on steel and aluminum in Canada. But that tariff cycle only lasted about 2 to 3 months before, after Canada's retaliation, the U.S. Took back their tariffs and everything went back to normal. So that's the other thing to consider. If it's only a matter of 1 to 2 months or 3 months, the effect may not be as significant. Whereas if it's 6, 7, 8, or a long term measure, then the effect on the real estate market is going to be significant. How much the real estate market is going to suffer, nobody can really predict that because none of us have a crystal ball. But the reality is, if Canadians lose their job, if the prices of goods increase, if the unemployment rate continues to increase on a national level, then obviously the demand for real estate is going to drop as well, right? It's pretty.
I mean, it's pretty plain point of view there that everything's connected back to real estate, and I mean, people's ability to purchase real estate all comes down to their ability to finance real estate, which comes down to their job, and banks and lenders will underwrite based on that, and if they don't have income or a job, then they're not going to be an active player anymore in the market, and that will just naturally take buyers out of the market, and with sellers expecting who maybe need to sell and are coming into a renewal with more listings trending upwards, that just means that there should be less sales and an average price decrease. But we'll see how it all plays out. I believe that it's a bargaining chip. I don't believe that this is going to be permanent. I believe it's a temporary measure to get a certain policy enacted north of the border that supports what the American policy is, which is they want to protect their border. We're going to hit you with tariffs unless you protect your border. Okay, here's 30 days to protect your border. You do it, we're going to take the tariffs off. So that's what he's saying, and that's what seems to be playing out even in Mexico with the tariffs south of the border. We want this in exchange for taking off the tariffs. So I don't think it's going to.
Yeah, just one last thing
permanent.
about tariffs. We're already seeing buyer and seller behavior change. I just had a conversation with a seller yesterday where they decided they want to wait. They were dead set on listing in the first week of February, but now they want to wait until March to see what happens with the tariff situation before they decide to list their property. I think a lot of buyers are probably in the same boat where they're going to wait a few more weeks to see how it all plays out. So, I wouldn't be surprised to see sales be down in February as well. I would not be surprised. We'll see in a month from now when we do our next talk show how that's going to be. But let's segue into our next point just before we go over into our buyer and seller tip. These are some interesting stats that I want to bring up. We've talked about the tariffs. We've talked about the interest rate drops. We've talked about the market statistics. Here's some polling that Ipsos did. So 28% of buyers are considering a purchase in 2025, with 42% of them being first-time buyers. So that just goes back to the renewed buyer confidence that we were talking about. 37% of homeowners are planning to sell this year. So that explains a lot of why we're seeing new listings. And at the end of the day, single-family homes continue to be the strongest asset class, and their price growth is going to continue to expect to outpace condo price growth. So let's break those down a little bit. What do you think? What do you think is happening there? Why do you think those statistics are coming about?
I think we kind of addressed it a little bit. The 28% of people looking to purchase a home is up, right, compared to what they did last year, or 28% of all buyers that they polled.
Yes.
Or 28% of all people that they
of
polled.
all buyers, all people are considering a purchase this year.
Okay,
with 42%
being first-time home buyers.
buyers.
Well, I think it comes down to the nature of it is simple, right? People who are buying for the first time are buying out of necessity, not out of investment. So that's the thing. No matter what happens with the market, yes, there's going to be people that are more shy from moving from one home to another maybe. But when you're buying a home for the first time, maybe you're moving out with your partner. That's out of necessity. So you're going to make that purchase no matter what happens, right? In terms of sellers, we've talked about interest rates. And, if the tariffs don't go through, rates are not going back to 2020 levels. Even if the tariffs do go through, rates are not going back to 2020 levels, which means that people who bought in 2020, 2021 with the 5-year variable, 5-year fixed are coming up for renewal now. And still they're going to feel a payment shock, so they're going to sell. So that explains the increase of people that want to sell.
One last thing, let's talk about this before we get into our seller and buyer tip. Condo sale prices, because I mentioned single family homes continue to be the greatest asset class. Now, Here's something that's interesting. In 2025, condo price, the average price compared to 2024, was only down by 1.6%. Personally, I'm a little bit shocked there because I would think it would be closer to 5 to 10% with all the media attention that the condo market is getting.
Was that in treble? Was that all across TRREB?
All across TRREB.
Okay.
So if we look at 905 region, it was actually up by 0.8%.
Okay. So no.
It was pretty balanced, but it was technically up. In the GTA, sorry, in Toronto 416 region, it was down by 2.4%. But
Which is where a lot of condos are.
Yes.
Downtown Toronto, and there's
but the sales numbers are pretty shocking because the number of sales were down by 12% last month compared to last year. So that's pretty shocking. Where do you guys see the condo market going over the next few months?
Yeah, I think the condo market is going to continue to collapse. Like I'm seeing a lot of.
Collapse is a strong
Okay.
word.
Yo,
Collapse
edit that out.
We're gonna keep that in there, but
Yeah,
let's change that word because collapse is a very strong word.
Yeah. Not collapse. I think the condo market is going to continue to drop, right? Even in 2024, if you compare the comps to the previous couple of years, the prices have dropped almost 30,000-40,000 on average, right? And now with a lot of the pre-constructions that are closing, a lot of them are closing around this time that people purchased around the 2021 range, right? And there's a lot more inventory too now. So I think it's with the market coming down, I think people are kind of shying away from the purchasing a condo, and they'd rather go up to like a townhouse or a semi-detached because those asset classes are becoming a little bit more affordable as well. So it just makes a lot more sense to get into like a townhouse or something a little bit larger than starting at a condo and then making your next step up. So I think condos are just gonna continue to sit on the market and just continue to keep dropping.
I agree with you. I think the prices will probably decline a bit more. I can't remember. I think it's about 20 to 30,000 new units are coming on the market this year.
Yeah.
So with the additional inventory combined with the with the inventory that we already have in place, there's just going to be a lot more supply than demand. I think it's basic economics. We'll probably see prices drop by another 5% or something this year.
Yeah.
We'll have to see. But what's interesting, I think I mentioned this yesterday we were talking, and a lot of projects that were scheduled to be launched this year and next year, last year, this year, and next year have been canceled, and builders are delaying their project launches. So typically, the average cycle of a condo being announced, pre-sale through construction, through final closing, is about 4 to 5 years.
4 to 5 years, yeah.
So all of the projects that are closing right now were launched between 2019 to 2022. They're now closing in 2024, 2025, and 2026. But where are all the units that are, would have launched this year and next year? When are they going to close if they're not being built, right?
Yeah.
So how do you think that's going to affect the market?
I think that shows that there is a light at the end of the tunnel, because right now, obviously, this is probably going to be one of the lowest you're going to be able to get a condominium in the GTA. So as the population continues to increase over a longer term, I want to say at least for the next 5 to 7 years, once the inventory starts coming down and people start moving in and people aren't selling, then the prices will. I think the prices are going to start climbing back up.
Exactly.
Yeah.
I agree with you 100%. I think right now inventory is very high. There's going to be a lag between project launches and the inventory going down, and sooner rather than later, maybe in the next 4 or 5 years, we're going to see inventory levels drop, but demand still be there. And that's when we can expect the condo market to increase. Now, obviously, all of that could change if certain things happen with the economy and stuff like that we talked in the past. But I think, like you said, that was the perfect way to phrase it. There is a light at the end of the tunnel for people that own condos. You just have to be patient and wait it out a few years if you're dead set on holding that asset. Whether you should hold that asset, that's a whole different conversation. But it
yeah,
really
I would
depends.
say, if you want to hold it, yeah, you can, and yes, the price will eventually recover. But the calculation you probably want to do is, how much is it going to cost me to hold this thing all the way through for 4 to 5 years, versus just maybe cutting and taking my loss now and taking that capital loss, reinvesting that money, possibly earning a gain in some other asset, whether that's real estate or stocks or something else, and then just setting that capital loss against the gain. Because the other thing is that if you're an investor holding this condo, right? If it's your principal residence, that's one thing. But if you're an investor, that's another thing, where you're going to be hit with this negative cash flow for the next 60 months. Add all that up together and see if that outpaces the actual loss you would take today versus holding it all the way through and dealing with it in 5 years. Because you're certain about what the price is today, and we might be saying, okay, yes, condos should recover in 5 years, but what if they don't? So you can calculate and estimate your cash flow, your negative cash flow over the next 5 years, and see if it makes sense to sell today. And even if you sell at, let's just say, like a $40,000 or $30,000 loss, if you had a gain maybe somewhere else in your portfolio, $30,000 in stock gains, you could offset that loss with those gains, and that 30,000 loss is actually not as costly to you because you're going to have some tax saving on, let's just say, the other gain. So, there's ways to move around it, but you can always reach out to us if you want us to run that calculation for you.
Yeah, and I think just one last thing I want to mention before I let Heaven speak about this is, while we are saying we predict condo prices to increase in the next 5 years, that does not mean we think condos are a good investment right now. So let's just make that clear. The prices for condos, especially for pre-construction condos, are way too high, and I personally don't think they're a good investment to make. There are much better investments you can make, and I think my colleagues here would agree as well. So I just wanted to put that note out there.
Yeah, so I just want to add on to that point. I think the only time you should buy a condo is if you wanted to move in as your principal residence. And I think it's the lowest barrier of entry, especially if you want to invest somewhere locally. But if you're looking to buy it as an investment, it's not a good investment. You're going to be it's at least $1,000, $2,000 in negative cash flow per month, right? And even if you do buy a condominium, renting it out is very tough right now. There's so much inventory, and the prices are continuing to come down in terms of monthly rents. And a lot of tenants that are moving in, they're very unstable. They're always shopping around. People on average, I'm finding they're staying in leases for an average of 1 to 2 years max.
Yeah,
because the prices are continuing to come down. They can get a bigger unit or a nicer unit for the same price that you're charging them, right? So you can't even get them in there, increase the rent afterwards. So
exactly. And I think that's just gone down to, we've lost a lot of international students, and immigration has stopped, so the demand has stopped there too. If you want to just make your point very quickly before we wrap up.
It's just a short point, which is obviously to touch on what Heaven says, also account for vacancy, because there was a crazy statistic where there were all these condos listed for lease and only X amount of condos. I can't remember what the stat was, but it was like 500 out of 6,000 condos only leased last month, which means that 5,500 of those investors had to pay for the entire cost of that condo for that entire month. And that trend will probably stick around.
Yeah, like even in the rental market, I'm seeing condominiums on average anywhere between 30 to 50 days on market. That's very normal now.
Yeah.
So you're paying the mortgage for those 30 to 50 days. You're paying the mortgage.
Exactly.
Exactly.
Yeah, I think right now, if you are thinking of leasing your property, pricing it competitively is very important. That's what's going to help you stand out compared to the rest of the inventory. And the second thing is, please hire a competent realtor that doesn't take photos with their cell phone, because that is so common in the rental industry, where agents are lazy. They make a lower commission, and I don't mean this to bash agents, but just to protect landlords and investors. A lot of people don't put in the effort and the money to market your property properly.
Even for a lease.
So for us, our philosophy is, whether it's a $2 million sale or a $2,000 lease, we're going to put the same amount of effort and money into our listings, which is why on average our listings for lease out in less than 30 days.
And let's not forget, we also do secondary background checks, criminal background checks, credit checks. All of that's included, and we charge the same thing that everybody else charges.
Exactly.
So that's all complimentary.
So
for working
just that last little point, just make sure, if you are thinking of leasing your property, hire a competent realtor and make sure they price correctly. It's better to take a lower rent right now than having your property sit on the market for 3-4 months, hoping for a higher rent. It's just going to cost you more in the long run. Just do the math.
It's simple math. I mean, you decrease it by $100, take that tenant now, or wait 30 days and lose, if it's $2,200 a month, $1,100 for the half month that you took or the whole month.
Exactly. So with that being said, I think we covered a lot of important ground here. We're gonna go to our last segment of the show, which is our buyer and seller tip for the month. So for our seller tip, Terrence is gonna help us out here. Terrence, what should sellers do?
Sellers should understand listings are up now 48%, more competition, more listings, more choice for buyers. How do you make your listing stand out? The theme is the same here. It's the same from last month. And it's something that we've also incorporated into our promo for this month, which is making sure your properties are renovated so that they're not looking outdated when buyers are looking at other properties. So they look modern and they look appealing to buyers out there right now. After you've renovated your properties, make sure you're staging your property, not just any type of staging, because I've seen staging be done and I've seen staging be done well. And if you have a really good stager, I know we work with a great one where they incorporate the colors and renovations into the actual furniture that they bring in and the overall design and theme of the home. On top of that, we take 4K video, 4K photos on all of our, 4K video and obviously HDR photos on all of our listings, which obviously appeals out. We take drone footage. So all these things you want to do. So then that way, when a buyer stops on your property on realtor.ca or wherever they're seeing it, it stands out and it gets them to take that next step, which is entering the property for a showing. And that's the name of the game. You need as many eyeballs on the listing as possible, so active marketing. And then you also need more showings to get you that high offer. So just be aware that your competition is increasing. That's the tip of the month. Your competition is increasing. So do everything you can to stand out by hiring a competent agent.
Exactly. Now, for the buyer tip, what should buyers do? So I guess I'll tackle this a little bit and I'll pass it off to Heaven as well. I think if you're a buyer right now, it's just as important as it was last month to work with an experienced agent. I think that's the best tip I can get you. In this type of market that we have right now, where the market is more balanced, yet it favors buyers more than sellers, you want to make sure you have a competent professional in your corner that knows how to negotiate the best price and the best terms for you. The difference between an experienced agent and an inexperienced agent is going to be that's a choice or a decision that you make that will cost you $20,000 or save you 20 or 30 or $40,000. So my tip for the month is if you are thinking of buying, right now is a great time, even with all the uncertainty, it's a great time to enter the market because the conditions favor you as a buyer over the seller. At the same time, you also want to consider real estate is a long-term investment. You're not purchasing a stock, you're not purchasing an ETF or a mutual fund where, things move within 1 to 2 months or 12 months or whatever the case is. Real estate, you're typically holding it for 5 to 10 years. And over 5 to 10 years, your time in the market will always mean more and affect you more than you trying to time the market. So my advice is number one, hire a competent professional. And number two, make sure that you take advantage while the conditions are more favorable to you. Heaven, do you have anything to add there?
No, I just want to add on to what Terrence said earlier regarding the staging. I think staging goes a very, very long way when it comes to setting up a property because I've seen regular staging where they just throw a nice furniture in the house and it makes the house look nicer. But there's the stagers that we use specifically too. They use specific styles of furniture and specific sizes of furniture to emphasize room sizes and room design. So it makes specific parts of the home stand out.
Yeah.
Right. And a lot of our even our own buyers, like sometimes our buyers would purchase homes and they remove the staging furniture and they're like, bro, the house looks way different now, right?
Exactly.
So staging
creates
goes like, yeah,
it creates an emotional connection.
it does,
So
it does.
so definitely, take those tips into account. We just want to lay out our February promo before I pass it over to Terrence for our tax tip to end the session. So if you are thinking of selling your home this year, for the first 3 homes or for the first 3 sellers that reach out to us to sell this spring, you can claim over $10,000 in free value. We will offer you a $25,000 renovation budget, interest free. We will cover your closing legal fees and provide you with a free legal consultation. We will provide you with a free tax consultation with our chartered accountant. We will cover your staging, your 4K drone, video, and photo, as well as so much more. So if you're interested, be one of the first 3 homes, just give us a call, 416-809-SOLD. That's 416-809-SOLD, 7653. Now I'll pass it over to Terrence for a tax tip.
I almost felt like that was a commercial, but it's very true. It's a once in a lifetime promotion that we've actually put together as a really good offer, combining all of our expertise here on the team to get you the top dollar for your home. But now, just segueing into the tax tip from the buyer's tip, this relates to buyers specifically. This is RRSP season. So your contribution deadline this year is March the 3rd. And so that means that if you contribute to your RRSP, you can get that tax deduction this when you file your taxes this April, and get that refund in this year in order to boost your down payment to help you purchase a home. So for all the first-time home buyers out there, because we know there's a lot of them according to the statistics, you first want to maximize your first-time home savings account, so your FHSA. That will allow you to make a deduction and get a tax refund on that portion of tax that you paid according to your marginal bracket. So for example, if you were in the 50% bracket and you make over $200,000 a year and you made a contribution of $8,000, well, you're going to get $4,000 back in a tax refund. So it can be significant. If you have a spouse that also makes $200,000, you put $8,000 into your FHSA. Now you've doubled that refund to $8,000 and you've boosted your down payment. So that's number one. After you've maximized your FHSA contribution room, you want to make a contribution, if you haven't already, up to $35,000 each in your RRSPs. What that'll do is it'll result in a $35,000 deduction against your taxable income, which will be refunded to you and your spouse. So I just did a tax consultation with some first-time home buyers searching for their principal residence. We were able to combine with him and his spouse, increase their down payment by $23,000 with this little bit of tax planning that we did before we took them out for their home search. And that actually increased the price range of what they could afford and be able to get all their needs in their home search met. So that could be the difference between settling on the home you want to buy first and finding maybe your dream home on your first shop. Because remember, for every 1/5 that you put down, the bank will loan you the other 4/5, right? So if you put $20 down, the bank will loan you the $80, so long as you qualify, obviously. So for that $23,000 down payment, roughly they increase their buying power by about $100,000.
Yeah.
So which is significant in today's market.
Which is quite a bit. And you know what? That's the difference between you having to ask your parents to help you cover your closing costs or covering your closing costs yourself, right? If you're a first-time buyer. So definitely reach out to Terrence and reach out to us if you want a free tax, if you want a tax consultation. We'll definitely be able to assist you. This was a pleasure, gentlemen. Thank you so much, everyone, for tuning in. We will see you guys next month. Just before we sign off, you can follow us on Instagram at Synergy Real Estate. That's SYNERGY Real Estate on Instagram. Give us a follow. We post a lot more content that's educational and informative. See you guys next month.